everyone, and welcome to another episode of Unscripted Equity Curiosity. My name is Ami Joseph. I'm the sector head for technology here at Hedgeye. With me today, as always, are Felix Wang and Andrew Freedman, sector heads for China and communications. And this is Unscripted Equity Curiosity, a Hedgeye podcast. And this is season 3, episode 11. So we're 2.5 seasons into our podcast. And in this podcast, we discuss ideas that are related to investing, whether it's thematic or macro or sometimes specific stocks, or major changes in our assumptions. And we battle it back and forth. And this is the cutting room floor of research and a lot of the process that we use that generates ideas that go directly into our longs and shorts that populate our specific recommendations that we have here at Hedgeye. Today, we have a special guest. His name is Daniel Biolsi. He is the sector head for staples, for consumer staples here at Hedgeye. He's been at Hedgeye for 6 years, is originally a University of Virginia graduate back a couple decades ago, and has worked across Wall Street, including having worked at some point at Lehman Brothers, at Weisbeck and Greer, at Northstown Capital, Glen Hill Capital, a long career on the Buyside, before joining us here at Hedgeye. And one of the things that struck me about Daniel is very early on, I noticed he has a sharp buy-side mind, cutting through a lot of BS and right through to the key investment parameters. I noticed this at one point when both Lyft and Uber were going public, and Daniel and I were talking about Lyft at, I think it was a Christmas party at the time. And I take every new, no matter how much BS, I take it seriously. Oh, it's changed people's lives. It's so much better than taxi, whatever, et cetera. And Daniel's like, it's a short. And we just had a great discussion. It was fantastic. And we did end up shorting Lyft, and that was a good one. So Daniel, thank you for joining us. We're pleased to have you here today.
Thanks, Ami. And thanks, Andrew and Felix, for having me on. It's a pleasure.
So I want to go first with a question that's kind of topical, because you presented on Molson, I believe yesterday.
Yes.
Yesterday, and for our listeners, you'll be getting this in a couple of days, so it's within the same week. I don't remember. I've been around a little bit, and I don't remember boycott economics being so powerful that, or maybe I'll put it this way, like I don't remember seeing a movie called How to Kill a Brand in 10 Days. And I want to take a step back and like understand, like, how are you thinking about this? Because this is going to be this, we're talking about the Bud Light debacle here, and this is going to be like Harvard Business Case 101 for like, how not to do marketing, right? Like immediate impact, the opposite of what you're supposed to do with marketing. And so I kind of just want to understand if you were to take this, maybe give us like how you see this conflict, how you see this situation, winners and losers, fine, however, whatever the outtakes are, but maybe we can widen it. And like, if you think about, I don't know, Coke and Pepsi and whatever, and like other major brands, like how are you thinking about this, how this plays out on a go forward basis across like the wider spectrum of brands in the United States?
Sure. I think it's a great question. I'd like to get your all perspectives as well. I actually don't think it's a boycott. That's not what I really consider it as, because like you said, boycotts really haven't been successful in the past. And maybe I should say that they're successful, but not to lower the sales of the target. Oftentimes boycotts are just for their own PR purposes of the people calling for the boycott. So if you think of PETA or Greenpeace, they do plenty of boycotts. And I don't think you could name a single company that they've tried to boycott where it's been successful, but obviously they are successful because they keep doing it, right? Because it gets them more attention, maybe more donors, more media attention for the group itself. So I actually don't think this is much more like a boycott. I think it's more like a brand injury. Like it's an impaired brand now. Like one of the comparisons I have thought of, and Felix covered this company at the time, I believe, was the Concordia sinking in Italy. And, people died, right? Felix, it was like something like 30 people died. And who wanted to get back on that cruise line for what,
Dude,
years?
that was an unfortunate incident. I remember that. Yeah, some people died there just because the captain got way out of control. But yeah, those were fun times. I mean, not so fun times for many, but it was interesting to take a look at. Yeah.
Right. And so I think of it as not that dissimilar as something like that. Or, Jack in the Box had this food poisoning of E. coli where a bunch of kids died in the 90s, where the brand is really injured and impaired. And it's not people just boycotting it. It's because there's like this social aspect of drinking this beer where, your friends would be saying, don't drink that beer. Like, well, look what you're doing. And that's what's kind of unusual about it, So I don't think of it as much of a boycott. And, in terms of my outlook, I think what I'm saying is I think the duration is going to be long. That the brand is I won't say forever impaired, but it's more than just, months, right? So the company, when it actually Molson Coors guided a couple of weeks into the quarter, they assumed that this wouldn't continue because they didn't really know. But, so the estimates I think are just too low because Molson Coors, they manufacture Miller Lite and Coors Light, and they're a clear beneficiary because, gosh, how many people can tell the difference, right? It's really just about marketing.
That's that's so fun. I mean, it's interesting, right? Like, just to throw in a personal anecdote for what it's worth, like just, Memorial Day weekend, the weather here was beautiful, lots of barbecues going on. I was with some pretty avid, Bud Light drinkers, and, it was very obvious that the Bud Lights have switched over to Coors Lights. Like, it's, and there's like definitely a social element to it as well. And I was speaking with him, and he was just like, yeah, it's all just kind of tastes the same at the end of the day. It's just, Coors Light, Bud Light doesn't really make a difference, right? Like, so in terms of there just being an easy substitute and, potentially it being, take longer. I mean, from obviously I cover the advertising marketing space, but like in terms of like marketing 101, it's like know your customer. Right. Like, and there's a spectrum of ways you can take it. Right. It's, it's potentially like, it makes sense to me, like that it would be impaired potentially. Right. I mean, it's, well, and so what happened so what was it exactly like in terms of was it a new chief marketing officer that they brought in, or like, right. What, do you know the details in terms of exactly like how this happened?
Well, sure. As best as I understand it, what they did was they hired maybe a year ago a new head of Bud Light marketing, and it was the first female in charge of the Bud Light brand, I think, in their history. And I think she did pretty well early on, and that's a big, as you know, Andrew, a huge marketing budget, and she was named to the head, and so she was quickly claimed by one of these ad agencies as 40 movers under 40 years old. So this is my personal read into it. I think that was kind of getting to her head, right? And then she did this Super Bowl ad. I don't know if you remember it. It had the actor from Maverick and his girlfriend, supermodel Miles Teller, and his girlfriend. They did this ad, and people liked it. It was trying to reach a young audience. It's fine, like it wasn't that memorable for me, but I'm not the target audience, right? So that's what they're trying to do. And she did this podcast a couple weeks before the ad, the Dylan Mulvaney Instagram or TikTok thing came out. And in that podcast, she was saying how the brand was getting too old, too fratty, and too much humor in the ads, and they wanted to go younger. So this wasn't by accident, and that's sort of like it gives you a little bit of background.
That was the tipping point of it, where like that
getting to her head.
Yeah, I mean that's it's a sensitive world we live in, and brands are sensitive. It could take a long decades to build, and it can become impaired pretty quickly.
Hi, Robert McGroarty here, Director of Subscriber Development at Hedgeye. Hope you're enjoying our podcast. Start generating alpha with our suite of Sector Pro investing research products. Dive deep into retail, industrials, technology, and everything in between, with exclusive access to the sharpest analysts and actionable ideas on Wall Street. Go to hedgeye.com/research to subscribe. Enjoy the rest of this episode.
Just the difference between this example and the ones you mentioned a second ago is that if someone had eaten the Jack in the Box, right, they would have gotten E. coli. And of course, even though the new versions didn't have E. coli, people were scared, like, oh crap, this company has bad procedures, quality control, and they risk the customer's health. Likewise, the Concordia sinking, you're like, well, why would I go with this cruise line? They're clearly not maintaining their boats properly, and I'd rather go with a company more reputable that doesn't have sinking ships, and I will live if I go on a cruise. So whereas this, like, what is the risk for drinking a Bud Light? Like, there is something very different between those examples and this one. And I agree with you about impairment, and I agree with you. There's some kind of there's something here that's like really messed up. I'm just trying to put my finger on this shift, it's something. Do you see what I'm trying to say? Like, it is a little bit different than those.
Right. So I give you a little bit of background that might also help, because, it depends on what state you live in. But there have been 75 anti-transgender bills, passed in 2023. We're not even halfway through the year, compared to, I think it was 26 last year. So if you live in some of these states, transgender bills, rights, whatever you want to call it, are top of mind. They are the most, I guess, most debated of the culture war issues, right? And so that's what this stepped into, I guess, because in some states, like in Connecticut, I don't think we have any bill, or I'm not aware of anything. So there's not much of a sort of a debate. But if you live in some of these other states, it is top of mind. And Bud Light, who should know marketing, stepped into, a very hot topic without doing any sort of due diligence on what that impact would be on their customer, if that makes sense, right? And so I think that was really poor management to let just, one or two executives do that when there's so many parties involved and, there's so many stakeholders, right? And in a company like this, it's a third party, they distribute through distributors, right? They have a ton of employees, and to just sort of jump in so, without, proper surveys done or knowing their customer, et cetera, right? So I think that's the other aspect is that it's a really top of mind subject right now, and, certain places more than others. So if you didn't know how big of a deal it was, I think it might reflect what you've just been hearing about.
Now, do you mind if I jump in on I have two questions. The first is, can you just maybe any way to quantify Bud Light's market share within its category? And then, have you seen, what evidence have you seen to in terms of share gains, maybe to other brands or even other brands within kind of the overall parent company? And then also just curious, what is their plan of action to try to address this? What have they communicated to investors?
Okay, I'll try to remember all of those.
That's okay. I'm good for asking questions. I'll remember them. Don't worry.
Bud Light is the number one brand in U.S. beer. It is, so obviously they also allocate it by segment. So within the domestic segment that it sits in, it has sort of double the share of Miller Lite and Coors Light, who are number 2 and number 3. So how big is Bud Light to Anheuser-Busch InBev, right? It's a very large global company. So Bud Light itself is about 5% of global volumes. So, at first, and so their sales, which still haven't bottomed yet. And I'm just talking about volumes because right now they're literally giving the beer away. They're literally giving you a rebate for almost the entire purchase price for Memorial Day weekend. So their sales, their volumes are down 29.5% in the last week, and each week just keeps ticking down. Not a lot, but 1 or 2% worse than the last week. So still decelerating trends. And Miller Lite, Coors Light, for Molson Coors, and that's why we went long. It's about a third of their global volumes. So, if you switch the lost Bud Light sales to Molson Coors, it's going to have a much bigger impact for them than it does for Bud Light. But what's hurting Anheuser-Busch InBev is it's dragging down the other brands now. The consumer is actually smarter than anyone gave them credit for, right? They own a ton of brands, and at first, people were making fun that they're going to switch from Bud Light to Michelob Ultra, which is owned by the same company, but they're actually they're not drinking that either. The sales are down, just not down as much. They're down let's say 10%. So all the other Budweiser brands, to some degree, depending on how much familiarity with who owns it, they're all going down with it. And then in terms of that social aspect that we talked about, and I got this wrong initially. I thought on premise, which means like at the stadium, at the restaurant and bar, would hold up better than what you're drinking at home, but it's actually worse. And it's that social aspect. That's what it means to me. Nick Balch, who works on our team, he was in a bar in Boston and he purposely ordered Bud Light on purpose, and everyone was heckling him. People were like trying to, out of their own sort of good nature, were trying to inform him of what happened so he can make better decisions on his own.
Wow.
That says a lot. This is in Boston, right? People were like, wait, did you not see the ad? Let me explain this to you. Everyone was sort of like, strangers were trying to explain it to him, like to get him in on what had happened. And that's the social aspect of this. So that's why on premise looks like it's doing even worse than the at home consumption.
Got it. And so besides giving the beer away for free, like what are they trying to do? Like, have they tried new brand campaigns? Obviously they let go the head of marketing. It seems like it's kind of a death spiral almost. And it's like, at some point it will probably, stop. But at the same time, if they're giving it away and it's not helping, then, that's even a bigger problem.
Right. And so they're giving away, they sort of almost have to, right? It takes about a month to make a beer. So, as their sales were going down, they're still making way too much beer, right? So they can either buy it back and pour it down the drain, or just kind of give it away at the retail, and which will save money, right? Because their trucks don't have to come back full. So forever, but it's what's happening around Memorial Day, right? This starts off the peak beer season. So what have they done? They did one like tweet basically, and everyone heckled them so much, all the comments, that they really haven't tweeted anything else since. They did one ad. It was sort of like a couple of young people at a country music concert. I'm not a country music aficionado or anything, but it's supposed to be a big song that every country fan knows, and people were upset they even used that song. It had, it was just like a summer concert sort of song, and they had to disable the comments on YouTube and stuff because so many people just wanted to comment on the situation. So then that was it. What they've told the public, distributors, et cetera, is that they're pulling back marketing dollars from global markets or international markets and trying to spend it here in the US and try to defend Bud Light. And, the things I know that they're doing, like they have maybe a special can for veterans. They have a Harley Davidson collab can, trying to
yeah, but like you said it yourself, like the consumer's smart, and because they were so explicit in their messaging, like through that leaked video, it makes it so or not leaked, but that video, it just makes it so hard, because then they just know what they're trying to do, right? It's just like grasping at straws at that point.
Right, and then the CEI is like the HRC puts this out. It's like a vote, for workplaces, like how good of a workplace you are for employees. And they had a perfect 100 score, and then they've now suspended AB InBev because they haven't sort of supported, transgender rights after this has come out. Like they haven't said anything to support the influencer, right, at question. So they're even pissing off the people that they were trying to reach with the video or the collaboration itself. So they've made no one happy, and I don't see what they can do. And I'd be curious what you think they could even do. I think right now that they're what they're looking at is hoping that the distributors can sort of speak for themselves. Like you've heard maybe some this is all third-party distributors, right? You can't distribute it yourself. And they're hurt by this too, right? Their business is down just as much, where they've come out, bashing corporate and saying, we have real employees here in our local town that, our sales are down and we didn't do this, right? They're trying to do that. I don't think that matters. I think they're, sort of cannon fodder in this culture war. I don't know. What do you guys see from your angle in terms of, what they can do, if anything.
I mean, I'll chime in, and then I know Felix had a question, but like, it's so hard when a brand starts catching fire like this. Frankly, the only thing that they can probably do is just time. Like, and that's not even something they can do, right? It's just, people tend to have short memories. This isn't a boycott, right? So they'll probably have to, it'll take a long time for them to kind of claw it back. But, maybe I would just even look at, what I would do if you haven't already, I would look at Google Trends and look at for like, Bud Light, whatever, like bunch of keywords, right? And I would just track that over time. And I bet you that would be a really good, coincident high correlation indicator of what's going on for sales, because like, I see it in my space all the time, right? Like it's virality, it's social, it's media component, it's branding. And typically when those things catch fire, like they break out, but then they hit the hype and then they kind of roll over. So I would definitely, that would be an interesting, I don't know if you did look at that. If you did, I missed it, but that could be something that's interesting. But it's also one of those things where it's like you're catching a falling knife, right? So you're pouring more marketing dollars behind something. You could just be throwing good money after bad and making the problem worse. The grassroots thing that you just described with the distributors sounds interesting and potentially, right, as an offset. But it's something that's, I don't really know. I mean, I'm thinking about like, there was the Facebook boycott that happened, right? With at-large advertisers. Obviously that was impactful, but very short term, because what's your alternative to advertising on Facebook and Instagram? There's nothing, right? Like, and I thought your points earlier around, E. coli breakouts and all these things, like, like the question's like, oh, what's your alternative? Like, in this case, if it's such an easy substitute, then maybe those market share gains are permanent, right? So it's tough. It's tough. I'll leave it at that. I know, Ami and Felix, I don't know if you have any thoughts. I know Felix, you had a question.
Felix, why don't you jump in? I'll save my thoughts.
Hey, Daniel. It's really good to hear from you. Actually, let me just address your kind of question before I ask you my question. But look, I think in China, it's a little bit different if you boycott a potential product. I mean, I see it all the time in e-commerce when you have fake products, fake goods, or damaged products, damaged goods. And, the platform gets a lot of heat and it spreads like wildfire on social media. That's happened already multiple times this year. This is an ongoing issue. But people have short memories. Eventually, they get back to the platform and figure out, hey, we still need to buy this kind of stuff. Maybe we'll, give them a mulligan, so to speak. From the platform's perspective, in my sort of case studies from my area, it's more like, okay, we have to contain this from a PR perspective, but also, give all the refunds possible on the damaged goods or the misadvertised goods or products. And in addition, there are some platforms out there that give you a 10-for-1 refund. That's insane. So, if you buy something for like 20 yuan, you'll get 200 yuan back because of this type of dispute. So anyway, there are measures, companies in China can do to sort of contain this, but yeah, they're going to feel the heat, at least in the near term. But I actually had a question for you, Daniel, since we're on the topic of beers. I'm not a big, heavy beer drinker. I love Guinness and also Bud Light, but curious on whether, any American brands have made any kind of penetration into the China market. I've been kind of hearing from the grapevine that, Chinese consumers have actually found foreign premium beer to be very interesting. So I wonder if there's any kind of adoption opportunity or growth opportunity for some of these beer companies as with respect to China.
Well, I definitely think there was, before this happened, I was actually long Anheuser-Busch InBev, and China, that reopening was one of the reasons. China has a higher on-premise mix, and like you said, the U.S. beers are sort of seen as premium, but they also have a Chinese beer as well that they sort of have a stake in, right? So it's both a local brand as well as their Corona is selling, and especially in the higher end places, right? And so is the Budweiser brand itself. So that's part of it. Felix, I was thinking, compared to China, it might be like, I don't know what's happened with the NBA. I know that brand kind of got impaired, with some of the, what some of the athletes had said, or maybe the owners of the Rockets. I would say, I wonder if the NBA in China is a little more similar to what, Bud Light is to AB InBev in terms of brand impairment.
Yeah. I mean, the issue of the NBA is it's super hot. Almost every teenager, particularly male, knows the NBA in China, and they're very big sports enthusiasts. So, Tencent, NBA sports, or just NBA, and also some of the state-owned television stations. I mean, they're all trying to mend that relationship. I think it's already mended. Frankly, I think they've already established a new framework and a new deal on televising NBA. It's just a question of, can it still be live? Is it on delay? And so forth. But there's no doubt in my mind that NBA is a huge market for if you're looking for sports enthusiasts in China. They're absolutely crazy. Outside of soccer, NBA is probably ranked up there as some of the most popular pastimes. So, but it looks like they've at least from my knowledge, it looks like they've renegotiated that contract and try to forget about what happened with because I think it was some words that were spoken that was sensitive and controversial, and from my knowledge, I think people have probably moved on from that incident.
Yeah, and I guess one big difference is just the role the Chinese government played in keeping that down, as opposed to this is really just an organic reaction, right? And it's not really controlled by any one person. So this is really from the people.
Yeah, exactly.
So Daniel, I just sent you on Slack. I was just, while you guys were chatting, I just looked at boycott Anheuser-Busch on Google Trends. And then I also looked at Bud Light search. So it does look like it kind of peaked out in terms of unlike the second week of April. But but obviously there's can be lingering effects. But if you look at the states, right, it's like Alaska, Wyoming, Montana, North Dakota, Arkansas, West Virginia, Nebraska, Montana, Ohio, Wisconsin. So it's it all makes sense. In terms of what you were saying, in terms of where your core customer is and where they're seeing the greatest impact. In fact, Connecticut is 41 on that list. So I guess that makes sense.
Yeah, and then we know some of the sales trends regionally in the Northeast and the Pacific Northwest are sort of the least impacted, but they're still down low double digits. But some of the dark states, like the mountain plain states and down south, they're down even worse. They're down more than a third. So it's like you would expect. No surprises, right? That's where but they should have known better, right? Because that's who their customer is.
Yeah, I mean the only
hey Daniel, I wonder if we can sort of oh sorry, I didn't want to interrupt. Sorry.
No, go ahead, Felix.
Yeah, I was wondering if we could switch topics a little bit into Walmart. I know you covered that company. This is just from my perspective. I had a very burning question to ask you. because I've been thinking about it for a while, which is live streaming with Walmart and TikTok. What's the deal there, Daniel? Are they serious about, potentially expanding that opportunity, try to reach a more of a younger demographic through that partnership? Or I'm just curious, like what is Walmart's actual relationship with TikTok at the moment, and any type of e-commerce aspirations they may have?
Well, so I don't have any, special insights there. I will say, digitally, they've pulled back and sold almost all their e-commerce brands that they sort of accumulated when they bought Jet from Mark Lowry. So they haven't given up on e-commerce, right? So digital grocery is still, they're the big winner after the whole pandemic thing is settled. When the dust is cleared, that they're the winner. Just having grocery and non-grocery items in the same order is very popular with customers. So that's here to stay. But right now, they got rid of their e-commerce thing. So I do think that they would, they test sort of everything. They're willing to try. And so I think if they can see some sales gains there, that there will. They also have that, Paramount Plus, right, Andrew, trying to have that offset to Amazon. I think they dabble, and they're so big that they can experiment, right?
Yeah, Felix. So on the TikTok thing, I can offer some insight maybe. Like they started ramping that up in like late 2020, early 2021, experimenting with the live stream and the shopping. I heard that it went all right, like from a marketing standpoint. And then, obviously Walmart also has their retail media business, right, Daniel? So like they are also kind of looking to find ways and media platforms that they can kind of partner with to drive more advertising dollars, and using the data that they have by getting like TikTok as a form of inventory and supply, right, that they can feed their entire retail media network to. So I mean, it's the whole live stream shopping thing, with TikTok. I mean, it seemed like it was like all the craze, in 2021, like during the pandemic. I think it's kind of like leveled out a little bit, at least from the conversations that I have. So that's kind of deviating a little bit outside of the whole, Walmart piece of it. But actually on Walmart, Daniel, Target's obviously come into like the crosshairs as well. Is there any, like, are you seeing, because I know you cover Walmart, has obviously a big like defensive staples exposure, but like has there been anything in terms of like Walmart picking up market share or anything like that, like from Target as a result of what's going on?
Well, that's interesting too. So I'm long Walmart. Brian McGough covers Target, and he's short Target, and they had very diverging results in Q1. So Walmart, because part of why I like it, I'm recommending it, is it's mostly a grocer, right? So most of their sales, like 2/3 of the sales, are grocery consumable type items, and it's much less for Target. Target sort of does it as an afterthought, and they really depend on that apparel and all the other merchandise like beauty and stuff. So outside of this whole, this, and I would call Target as more of a regular boycott, rather, it's the brand. I guess it's arguable, but I don't think the brand is as impaired. It's more, it's more customers.
Yeah, it's like a retailer, and it's like Bud Light's like a product. It's like a specific product. It's not the same.
And Target might be like what the other companies were talking about, like when Felix was talking about platforms, where some people, Target's the only game in town, right? So as far as a brick and mortar retailer for certain items, right? So you kind of have to go there to shop. Whereas Bud Light, I think we've established, is very replaceable. Right? There's always
it's kind of like it would be the equivalent of like people boycotting liquor stores almost because of their carry Bud Light. It's like that's probably not going to happen. Like they'll go and get something else. Anyway, I thought that was just interesting point. Ami, I know you had something earlier.
I just want to hear the end of what Daniel was saying.
So we get the Bud Light scanner data on a weekly basis, so we know real time that things are only getting worse. We don't get the Target, Walmart, sales data by week. People do get credit card stuff, it has turned south for Target. Not anything like the same level, but enough where, and especially I think in some regions of the country. So Target's almost trying to have their cake and eat it too, by trying to move items and maybe in the south that are offending some people there, and not changing anything in other places of the country. So like you would expect, not as much, but still the impact can matter, right? When you have too much inventory, that leads to problems. And retail is a very competitive game, and if you have 5 less customers walking into the door, that's make or break a quarter.
Hi, Robert McGrory here, Director of Subscriber Development at Hedgeye. Join our entire research analyst team live before the market opens for deep dive investing analysis, our favorite stock ideas, and our risk manager in chief, Keith McCullough's macro overlay. Our team of 40 plus equity analysts discuss key market developments, trends, and our high conviction long and short investing ideas. You will not get this granular level of insight anywhere else. A video replay, audio version, and analyst summary notes from the call are available shortly after each live show to ensure you don't miss anything. Go to hedgeye.com/research to subscribe. And tune in live to the call weekdays at 7:45 a.m. Eastern. Enjoy the rest of this episode.
I didn't actually know about the Target scandal. What was that?
They just featured, some, I don't know, transgender, as well as gay rights, apparel, merchandise. And what people got upset about was some swimwear that seemed to be targeting children with, transgender swimsuits for children. I think that's what's upset people the most.
Yep.
Hey, guys, if I can jump in again on the Walmart question, I'm curious to hear Daniel's thoughts on what the company has said with China, because I know they have pretty significant exposure, particularly on imports from China. But not only that, but like they have different partnerships with a variety of different platforms, particularly grocery platforms in China. So I'm just curious, have they made any type of commentary on what's going on in China during the latest earnings call? I'm just curious.
I can do a quick look. I don't recall China really being a top topic. It hasn't really come up as much except outside of the sourcing. So, just to give you a little background, the last year has been pretty challenging for Target, Walmart. The consumer really slowed their spending. Nice sales starting about this time last year, and maybe a little bit earlier, but so they really had to start canceling a lot of goods. And there's a long lead times, and they've been dealing with too much inventory, and people spending more of their budget in the food aisles than the general merchandise, which is where they make more of their margin. So that's really what been the analyst focus. China hasn't come up as often, except for the in terms of the production cycle. So supply chain is better. You can see from the freight rates that the Target and Walmart, some of the biggest importers in the United States, they have really not increased their orders again. Right, it's still down, and all they want to talk about is how much their inventories are lower. They haven't spent as much time talking, just because it's not a driver of the EPS right now. In China in terms of growth, but doesn't get as much attention on the international operations, just because of how small it is in relative size to the whole company. But it doesn't mean they don't care. It's just that's what the analysts ask about.
Gotcha. Appreciate it.
So, I did have like a Bud Light thought, but more like it's just humorous more than anything else. But how like Trump lost the last election, so to some degree he has to sort of forgive people who voted not for him and say it's okay to make mistakes, just get it right the next time. There's some alignment between that and Bud Light, where Bud Light can, if they align with, I don't know, maybe that's like directly at that tier of voters and demographics and so on and so forth. Like if Bud Light partners with the Trump campaign. Anyway, that's a humorous, like if they really want to like recover, and basically like Trump be like, if people make mistakes, Bud Light made a mistake, type of thing. And just
I don't I don't think that's going to do it because, Trump's not leading this or anything. This is organic, right? Without a leader. So, just to give you an example, I don't know which one of his sons did it, but one of his sons said early on within the first week, don't boycott Budweiser because they're, they donate more money to the Republicans. They donate more money. I don't know if to Trump himself, but to Republicans than they do Democrats. They're, he was trying to say on Twitter, he's trying to say they're a good guy. They're not a bad guy. People don't care. Sales have gone down anyway. There's no leader for this, so you can't just turn it on or off. There's no one person in charge, right? That's why I think it's an impaired brand.
That's awesome. Yeah. And the benefits for number 2 and number 3, who are one company, are just going to continue and continue and continue.
As long as they don't screw it up.
Yeah, right. Hot potato. Maybe just off of the Walmart questions, I'm wondering a little bit if I can ask you to take the temperature of the consumer from to the extent that you have thoughts about where, like I could talk about in enterprise tech where we're seeing slowdown and how that's changing and so on and so forth, but kind of like where has the consumer been impaired? Is to some degree our budgets getting relief with inflation slowing down and so consumers are getting relief now, or does the overall, macro trends outweigh that and consumer budgets are down? And how do you see this unfolding in the next kind of 10 months or so?
Sure. Right. So that rate of change, right? The inflation is disinflating. I don't think that's how the consumer views things, right? They still view it as things are very expensive. They need it to be down sequentially, not, up at a slower rate. That's my personal thought. We as analysts do it differently, right? Because stocks don't behave just like the consumer does. So I don't think they're seeing that much relief. We are at we're getting to some big peak year-over-year changes in gasoline. So gasoline really surged in June. So it's a year-over-year benefit. If you listen to their call, they got a lot of questions about, emergency food stamps have ended March 1. So that's been a big benefit for the bottom, 10% of households. And then that's, had a big hit to that. On the other hand, though, what I see coming forward, which I think is an even bigger deal, is the student loans resuming those payments, because that's larger than, what people receive in student and in food stamps. So that student loans resuming, maybe Walmart's not the perfect place where, college graduates spend their money, but that in terms of the size to the economy and the consumer budget is about the same, and that's going from 0 to say $400 a month, right? Whereas the food stamp spending is declining by $70-$80 sequentially. So I think that's going to happen. Walmart has been talking about in the most recent conference calls is a higher income people coming to their store. And then people in the store trading down to more private label, everything that you would expect, right? It's not horrific. It's not tremendous, but there's definitely trade down and trade into Walmart. So, what happens going forward when, some real stress happens, that's, it'll probably just get worse.
Got it. Yeah. So essentially still having stimulus coming out of the economy now, with kind of like the food stamps and the student loan forgiveness, kind of ending. Hadn't really thought about that. Hadn't thought about stimulus being still present in the market all through to now. So that's kind of interesting. Unless you guys had a question about the consumer, I wanted to shift to something else. No,
I'm good.
Go ahead, Ami.
So I think of our jobs more like the buy side than the sell side, Daniel. Not that we're paid on performance. To a certain degree we are, because our customers kind of move with us and win with us. But to the extent that we don't care about, we don't care about just sort of let's say moving earnings models forward on 25 companies and keeping relationships for non-deal roadshows going with 25 different management teams. And sort of the blocking and tackling stuff. Like we don't really do any of that. And so it really is just about like a best idea model, or at least that's kind of like how it was meant to be, and still feels that way to me, with the difference that maybe like, a buy-sider can put a short on today and take it off tomorrow and, whatever. And we don't have that. And also buy-siders moves are completely opaque, and ours are completely out in the open, which is good. Our customers can learn from us, hopefully on both sides. So, but I'm curious, like you spent a really long time on the buy side before coming to Hedgeye, and I'm really curious to understand, like in your view, like the difference between this job, this role, and the buy side, and how it has either hurt or helped your process over time.
I like when you say a really long time makes me feel old. No, there are a lot of differences.
I'm in the same bucket. We graduated college the same year.
Yeah, okay. There are a lot of differences. I think there are probably more differences than similarities, right? What we're trying to do. But so I started off in the sell side, and I switched to the buy side because I thought that was more aligned with, just my personality and what I liked. But I also thought there'd be, less politics, and I was wrong about the latter. And, my personality has also changed as well. I voted most shy in high school, right? That was my superlative. So for me to get out there and speak to people, that's not what I wanted. When I was 23-year-old and, seeing my boss on CNBC, that's not what I aspire to do. I'd much rather, have that anonymity of having a stock, and yeah, maybe you see it in the 13 Fs that I owned it, but you don't know when I sold it, right? Like only one person, only internally do they know my performance. My performance isn't out there for everyone to see all the time and comment on. And believe me, they do comment on it, right? So it's a little different. But so I think I've adjusted, and my process is adjusted with that. I think with anything, it helps to see more sides, right? No matter what it like. Take anything you want, whether it's like engineering or sports. If you do one thing, it helps if you've had an experience doing something a little bit different too, right? So I think that helps. My second time around on the sell side, that I had that buy side experience. If I wouldn't be the exact same sell side analyst if I had never sort of left Lehman, right? I mean, obviously Lehman went away, but I think that helps, and it's just also resources, what resources different places have. You mentioned we don't spend nearly any time worrying about calling investor relations to make sure we're towing the line on the quarter and where our estimates are and that type of thing. We spend our time elsewhere, right? But so it's it's all about resources, and ultimately the Hedgeye model is we're here for the clients, right? So if the clients, if they wanted us to, dial down on the quarter the best, that's what we do. If they want us to just pick stocks, that's what we do. And also if they just want, perspective on Bud Light, have I seen anything like this in my career? What else can I liken it to? So I'm going to discuss it through, because, a lot of times, you're at the buy side, you're alone. There's no one else who covers, let's say, beer companies at your firm, right? That's often the case. So you have no one really else to talk about this and talk it through, right? So sometimes they just want to discuss this with you too. And that's why I think it helps to have that experience.
Got it. And then from a stock picking perspective, how has your process changed since you got to Hedgeye?
Right, it's definitely changed. I think the biggest thing that I'd say, number one, is using Keith's quads more. So, I was backing up. I was one of the Hedgeye's first customers, but I think, correct me if I'm wrong, Felix, I don't think we had the whole quad thing back then, right? So I started before that, and I'm integrating it more and more. I think I'm integrating it more now than I was just 6 months ago, right? With paying more attention to style factors, trying to be quicker. There's always that, we're always all of us are trying to balance, not to do things on a day-to-day, thing, but, not also trying to do things on a 3-year basis, right? So trying to balance all through that, right? And that that's the same thing on the buy side. It's a duration, right? Like if Warren Buffett was at a pod shop, he would have been fired, before he hit 25 years old, right? So you have to find that duration match, and I think our clients are probably getting shorter and shorter as well. So trying to adapt to that too.
Hi, I'm Keith McCullough, and I wanted to introduce you to my favorite product at Hedgeye, the Macro Show. Why is it my favorite product? Well, it's my show. I do that every morning. If you want to get ready for the market day, you want to contextualize all the data, you want to make good decisions, then this is what you should be watching. It's a repeatable process that you can deliberately study, measuring and mapping time series to time series of data. So it's not going headline to headline and getting whipped around. It's actually being so much more dispassionate about it and making good decisions that are data driven. So we'd love to have you on our team. Come join us.
Tune in weekdays at 9 a.m. Eastern and on demand anytime. Go to hedgeye.com/research to subscribe.
Let's bring that full circle now as you think about your sector. And you can also, if you prefer to comment outside your sector, given the things we talked about, I called it boycott economics, or how to kill a brand in 10 days. But I think you talked about impairment. I think you and Andrew talked about Target as well. And in the context of sort of culture wars and hot button issues, we talked a little bit about Walmart's outperformance against other retail outlets. We talked a little bit about the consumer, pressure on the consumer, further pressure coming on the consumer. So when you're thinking about stock picking now through all of this, are there puzzle pieces where you're like, I absolutely love, I want to be, long utilities and short this, and I hate tech and I want to be this and that, or the bubble is still here, or for me, I want to be like no cash, no equities. I don't know. Tell me how you're stock picking through, either from your sector thematically or wider than that. Like how bring that all together? Because like you're the things we just touched on, even just in the last few minutes, just your coverage covers on so many different interesting areas of the economy.
Right. It does. So I'd say, consumer staples, the sector tends to benefit when your sectors, right, all three your respective sectors are having more problems, right? When the consumer is having problems, they still have to eat. So, I tend to, I don't want to use the word thrive, but I tend to benefit from, hardship elsewhere, right? That they are, cutting discretionary spend when the food prices are up by 13%, right? So, looking at that, but so that the group is has a big macro portion to it, right? And I think when I listen to Keith and I view a tougher environment for the consumer, and I just don't see too much of that from my companies. Just looking at it from bottoms up, right? From my companies, like they're not having a problem passing on price. The unit declines are so small compared to the price increases that they're getting. We're also coming against this big comparison of when their margins got crunched from the supply chain issues and the spikes in all the commodities. Now they're getting huge margin gains. So, I'm not just looking at it just that way, but I'm also looking forward to inflation. I think is not going up as much, right? So I think what's going to matter more for my companies is organic growth, which is sort of a lens I've always looked at consumer staples companies from. So I'm concentrating on, especially on my top picks, where I have good visibility into unit growth in the second half of the year and beyond. So that's generally where my starting place is in consumer staples. Like if I can't say, like, I don't know where, unit growth will be, in Q4 or Q1, it makes it hard for me to recommend a company, right? When I have sort of no clue, like what let's say chicken will, demand is going to do in the second half, right? So and that kind of keeps me from that. So I really want that visibility in order to have that conviction. And I think that's what you're looking for in consumer staples. So I can't recommend companies where I don't have that visibility, because I think that's what you want when you invest in consumer staples. So I try to be looking at those companies, and so we probably don't have time to go through them, but that's what, if you look at the top of my position monitor, you have companies where I have very good conviction in that unit growth in the second half in early 2023.
Okay, that's interesting. So visibility in unit growth in Q4. Andrew, I almost want to be like Andrew. Which one of your companies has that? Felix, which one of your companies has that? It's a good way to think about things, a good lens for us. I know we're getting to the end of our time. I know, I think Felix's wife had a question for you, Daniel, as well. Felix, go for it.
So I'm going to ask on behalf of my wife, but she's been always worrying about the egg prices at Walmart and Costco and other grocery stores. Curious to see if those are fun.
Where egg prices are, in the last couple of weeks, but it's really fallen. The bird flu is still around, but it's not getting any worse. And chicken is still the easiest protein or animal to grow and raise, right? So they have the shortest cycles, whereas beef it takes 2 years. So we're going to enter a pretty tough beef cycle, but chicken eggs is something that unless there's a real issue, that any sort of price spikes are going to get addressed in relatively short period of time, because you'd be surprised at how quickly it is the chicken goes from being born to being able to have its own eggs. So it's fast enough for even the pod shops. How about
that? That's so true.
All right, well, awesome. Well, Daniel, we're coming up on the hour, so I wanted to wrap there. And thank you very much for being on our podcast. Really appreciate it. I think we covered a lot of ground. The consumer, this culture war stuff, is just fascinating. My brain is still melting from the whole subject, and I think you did a really good job of explaining it. I'm looking forward to going through the slides of your deck as well. I encourage all of our listeners to sign up for the Hedgeye Consumer Staples Pro so that you can get access to Daniel's presentation on the sort of Bud Light and debacle and the benefit to Molson and Coors, and to see that analysis and to learn from Daniel as well. We really have appreciated this, and hopefully we'll have you back on again soon to talk about other exciting issues and more on the consumer and unit visibility and other elements, perhaps supply chain next time as well.
And egg prices.
And egg prices.
Thanks. And next time I'm going to have more questions.
All right. Awesome. Well, thanks, Daniel. And thanks to our listeners, and we'll see you next time.
Don't forget to check out Hedgeye.com to get more actionable investing insights from our team of more than 40 research analysts. And check us out on Twitter at our handle, @Hedgeye. This presentation is informational only. None of the information contained herein constitutes an offer to sell or a solicitation of an offer to buy any security or investment vehicle, nor does it constitute investment recommendation or legal, tax, accounting, or investment advice by Hedgeye or any of its employees, officers, agents, or guests. This information is presented without regard for individual investment preferences or risk parameters and is general, non-tailored, non-specific information. This content is based on information from sources believed to be reliable. Hedgeye is not responsible for errors, inaccuracies, or omissions of information. The opinions and conclusions contained in this report are those of the individual expressing those opinions and conclusions and are intended solely for the use of Hedgeye subscribers and the authorized recipients of the content. All investments entail a certain degree of risk, and financial instrument prices can fluctuate based on several factors, including those not considered in the preparation of the content. Consult your financial professional before investing. The information contained herein is protected by United States and foreign copyright laws and is intended solely for the use of its authorized recipient. Access must be provided directly by Hedgeye. Redistribution or republication is strictly prohibited. For more detail, please refer to the terms of service at hedgeye.com/terms of service.